Let's shift gears and talk commodities. We have Bill Baruch joining us this morning, the president of Blue Line Futures, here to help us do that. Bill, welcome. It's good to have you with us. I mentioned at the top of the show how the indices were inching higher with investors optimistic that recent earnings seem to be aiding that some. I think now with 75% of the S&P 500 companies that have reported so far have beat expectations. But I'd imagine crude coming off some of those loftier levels, no longer advancing at the very least, well, off that 130 level must be helping sentiment as well.
Yeah, thanks for having me on. And I agree. Sentiment is shifting a little bit with this, with earnings as well as crude coming off. In fact, I spoke about crude, coming off and commodities coming off on Monday with Oliver on his show. And I believe that, and but I don't think the rally in crude overall is done. I think this is going to be a longer term move, and it's just sort of getting started, and maybe middle early innings. Now, one of the things I didn't get my morning note out to clients just yet because I'm joining you. But one of the things I actually put in that note was saying, make no mistake, today's strength, this early morning strength, is all about Tesla. And coming on the heels of Netflix's just debacle, it's slasher on what was that, Tuesday after the bell. If Tesla missed yesterday, this market would have been cratered. And the fact that they beat, it's buoying sentiment. You're getting a ride higher in the markets, and I think that's really driving things right now. I mean, they crushed earnings, but you also, you have retail right now. I think you have some front running overnight, with maybe institutions just sort of pushing this thing higher. But I'm very curious in this opening hour. How does retail receive Tesla? And I mean, obviously they're going to receive it pretty positively. And the headlines ever since the onset of the pandemic have been this massive call buying by the retail sector. And I mean, if we start seeing massive call buying, yeah, that could take markets higher. So I mean, there is some resistance here in the Nasdaq that I'm watching very closely. 14,250 all the way to 14,350. And does it get through this area, or do we fail like we did yesterday here? So that's going to be the real question. I think we'll have some answers in the first hour.
To that point, I was kind of thinking about that as well earlier this morning. We saw Netflix down something like 37%. We've got Tesla up something like 7%. So, again, in terms of tipping the scales one way or the other, we'll be curious to see if Tesla can kind of be a reflection of investors' optimism, which has been the backdrop for the market for many months headed into the end of the year, throughout the beginning of the year. Not so much, it seems like, as we've been more concerned about rates on the rise here. But that being the case here, again, I'm sort of thinking about this backdrop, which unfortunately throughout the beginning of the year, without it, we've seen more a situation where it's kind of like one step forward, two steps back. I mean, we've been able to rally back and roar back, but more kind of reminiscent of a bear market type rally. Again, similar to what we saw throughout the month of March, a rip higher, taking out the Feb highs, but April, we still have yet to see that follow through.
Yeah, you're absolutely right. And that's going to be interesting here today. We have this early strength. Do we hold it through the first hour? And then we have Powell that talks. And does he, how hawkish do they want to get? And I also, looking back earlier this week, we heard those hawkish comments from St. Louis Fed President Bullard, who was talking about a 75 basis point hike potentially in May and getting to 3.5% by the end of the year. That's very hawkish in a little more, he's moving the bar just a little bit. But the market, I think, likes hearing that from him. He's supposed to be the even keel. Him and Waller are supposed to even out, what was a more dovish Fed. But now when you're getting the more dovish members, such as a Brainerd, who become hawkish, that's when the market really wakes up, because then the entire Fed is shifting more hawkish. So if Powell today comes in more in line with what we heard from Bullard earlier this week, I don't see these gains holding. I think we'll see the market fail again. So that's going to be something very close. I'll be watching very closely here. But not just the Fed, the ECB. They had the ECB Vice President de Guidos. He said this morning that we could see a rate hike from the ECB as early as July, and he was the more dovish guy, and so he's starting to move as well. So it's really taking place here, and that helped the rates rebound. Treasuries lower here on the day. Both U.S. 10-year and German 10-year are inching back higher from yesterday's sell-off in the rates. That's
also helping give the euro currency a little bit of a lift here today as well. It recently tried to break out to the downside. It seemed limited follow-through so far. The dollar's coming off a little bit again today as of was the case yesterday. Now, kind of tying back to my initial question to you in terms of are the indices getting a little bit of a lift as commodities have eased off, I guess kind of tying to your point there, rates have eased off a little bit as well. I'd imagine that's helping some also at least find firmer ground for the commodities. But, as you mentioned, that call for a 75 basis point rate hike at the May meeting, or at some point, I think it was basically not really specifically towards the May meeting necessarily, but he was also clear that's not his base case, but it sort of sparked a thought for me in terms of, when we heard that first call for 50 basis point rate hike this year, springs and washers and, everybody's was kind of looking at you like you had three eyes, but now that's almost like a base case for May. I guess I'm wondering, does this sort of become that first introduction of that 75 basis point rate hike, something we haven't seen, I think, since 1994?
Yeah, I think it's very interesting. And sort of take your first question here with commodities coming off. I do think with crude coming off and that was something earlier this week that helped the market move up. But when that happened, you also saw yesterday the 10-year yield got near 3%. Was it 2.98? I think was the high. So I think people can start taking some risk, and they're looking at it. Okay, maybe 3% is going to be the near-term ceiling in the 10-year, and that encouraged some risk on in the equity space as yields started to back off. Now, shifting back to that 75 basis point hike. Listen, I actually believe that I think they should get it done right now. Do 50 basis
Rip the Band-Aid off
today. Just do it today, and you have a month, and they can follow up with 50 basis points in May. What they really need to happen, if we want to see record highs by August and September, we need to shock the system. They need to come in. They just need to do it, because right now you're starting to see some of the inflationary, from the commodity space. Like you said, crude oil's coming in. Ags are still at the highs, but metals are down here, down today too. If they shock the system, we can start seeing some of these commodities come in, some of this inflation come in, and the timing is going to be crucial because it has the time to work through the system by June. And then when those June inflation numbers, remember, I've been talking about this for months now, the Q1 2021 average CPI, core CPI, was 1.4%. So when you get 6.6% core CPI just this last week, that's 6.6% on top of 1.4% base comparison. Let's go to July and August of 2021. That average was 4.3%. So if we're going to talk about these higher base comparison numbers and then inflation already coming in, we're looking at a landscape that's very supportive to risk going into August and September. And I think that could be a very big catalyst to record highs.
Aside from crude, talk to us, Bill, in terms of commodities you have your eye on that our viewers should be watching.
Well, I like gold and I like silver overall, but you know what? I mean, we're right now seeing that come in. I mean, you can see here where the equity market made a turn, gold started to sell off. Yeah. I like gold. I'm keeping a very good pulse on it. I like to see this thing remain constructive. My thesis in gold to come into this year really wasn't, okay, that Russia's going to move in on Ukraine and China's going to move in on Taiwan, and that's the reason why gold should rally. Russia and Taiwan have been adding gold for years. And so people follow Warren Buffett for his stock picks. Why not follow Russia and China for their gold habits? But on top of that, the gold usually, if you look back to the 70s, if you look back to 2004, gold rallies when the Fed begins the rate hike cycle. Now, I think the only difference here is the fact that you're looking at, gold has rallied. So, gold's really hit 2000. The only difference here is we're starting to see, more hawkishness to battle. But once we get over this curve, shock the system, surprise today with 50 basis points, come in with May with another 50 basis points. Once that sort of happens, they're going to slow growth. That's going to be a big catalyst for gold. So I'm really watching gold very closely. We're not overweight necessarily right now, but we're using weakness to reposition. I think, this rally in gold's not done. I think it's something to keep a very close eye on here in the coming months. I think it could be after the June contract expires, we could really have a liftoff.
A good point. Gold has done very well. Just this week, it was at 2003. We're talking some $86 off an all-time high. Here you can see the trajectory and how the bulls have been handsomely rewarded for sticking with gold over the long term. Bill, appreciate you joining us and sharing part of your Thursday with us to talk commodities. Bill Baruch, president of Blue Line Futures.